Good morning, everybody, and welcome back to Beat the Bell, presented by Kane Capital. We are almost through what has been quite the crazy week in the market. Coming into this week, what did we have? We had FOMC, Apple earnings, and NFP this morning. All three of those now behind us, and hopefully we can simply trade the price action. But we survived. We did well. Hope that all of you traded well this week. To talk about what we saw this week and what we can expect moving forward, we've got an awesome panel with us this morning, starting with Money Mander. Good morning to Money Mander. No Money Mander. Diamond Trades, good morning.
What's going on? Yeah, filling in for Mander today. Should be a good show. Just had NFP, as Alejandro talked about. We'll dive into that in a little bit.
All right, Ramsay Rippers.
What's up? Good morning. Apple, man, double beat, 170. Rip it.
Rip it.
Have a good day.
All right, Stock Snipa.
Good morning. NFP out the way. Let's get some bags. Let's trade good.
All right, and Moe Mamba.
Morning, Honda. Morning, boys. Yeah, no movement really on NFP here. So let's see what we get today.
All right. Let's go straight into Fed forecast. Diamond manning the ship single-handedly this morning. What do we got?
So we just had NFP come in at 253,000 versus 190,000 expected. So definitely a hot print. Market pulled back a little bit initially on that, which sort of makes sense. I guess this is a bit surprising. I mean, unemployment came in at about 3.4% versus 3.6% expected, showing the labor market is still pretty strong here, which, sort of gives Fed the green light to continue to be aggressive. We really don't have much of a reaction in the market. We're basically trading flat from like right before the NFP came out. So not much has changed on that front. The numbers definitely are a bit interesting, though. I really wasn't expecting the NFP to come in that high. So yeah, I guess we'll have to see how the markets want to react for the rest of the day surrounding that. That's pretty much all of the news that we've had for this week. We don't have anything else really for the rest of the day. And next week we have CPI on Wednesday, but that's really the only high impact news. So yeah, a lot of the aggressive news drivers are out of the way. The big earnings, and then NFP finally over, FOMC finally over from Wednesday. So let's actually dive into that, because we had FOMC on Wednesday in the afternoon. So Fed Chair Jerome Powell announced on Wednesday that FOMC was going to raise the benchmark federal funds rate 25 basis points, bringing the target rate to 500 to 525 basis points as anticipated. This is the highest level for the federal funds rate in the last 16 years. While many investors interpreted Powell's press conference comments as a sign of a pause at the next meeting, Chair Powell made sure to leave the door open for additional rate hikes down the road, saying additional policy firming may be appropriate if the data shows that inflation continues to remain resilient and the labor market continues to remain strong. And the data today definitely shows the labor market continues to remain strong. So I guess we'll have to keep an eye on those metrics going forward, particularly with the labor market, because inflation really does seem to be on its path back to that 2% target. But the labor market just seems to be continuing to chug along here, particularly today after these numbers. The combination of Powell's slightly dovish tone and the clear stress on the regional banks in the U.S. this week, with the FRC being taken over by the FDIC last week, and then the subsequent sell-off in banks and regional bank stocks in particular this week, the market's pricing in basically a 99% chance of a pause at the next FOMC meeting in June. So that's up from 62% same time last week and 55% a month ago this time. So the market is definitely starting to more aggressively price in the top in the federal funds rate here. The market really does not believe that the Fed is going to continue hiking, given the path of inflation and how things have gone so far, and given the stress on the regional banking sector that we have seen so far. Powell didn't give any updates on when the Fed plans to cut rates, but the derivatives market is pricing in about 50 basis points of cuts before the year end. He's been repetitively talked about, how they're going to be data dependent and they're not looking to cut this year. What the market really is sort of calling their bluff there, saying that they're going to raise by they're going to cut by about 50 basis points before the end of the year. So we'll have to see who wins there. Apple reported earnings yesterday. Let's dive into that. So Apple reported a double beat yesterday after the close. EPS $1.52 per share versus $1.43 expected. Revenues came in at about $94.8 billion versus $92.8 billion expected. The big tech playbook thus far this earnings season has been mention AI as many times as possible. And maybe they'll ignore the poor forward guidance, right? But Apple took a bit of a different strategy, focusing on their growth in emerging markets, particularly India. Apple executive said the word India 4 times more than the words AI on their conference call. They set iPhone sales records in several emerging markets in Q2, including Brazil, India, and Mexico. There was a lot of talks heading into the Apple earnings about the possibility of, weak iPhone sales, but revenue came in higher than anticipated on the iPhone sales front. They set a quarterly revenue record for iPhone sales in Q2 there, the most iPhones that they've sold so far. When you take, sort of a step back, it's not necessarily all good news for Apple, the world's largest company. So this was actually their second straight quarter of declining revenues, 3% drop in year-over-year revenues compared to Q1 from last year, particularly with weakness in the Americas. We talked about how they had some strength in emerging markets, particularly with weakness in America in regards to iPhone sales, which is their largest market, obviously. Profits were flat on a year-over-year basis, so profits didn't necessarily grow, which I think speaks to the quality of the management team when you have revenues dropping 3% year-over-year, but you can sort of maintain that same level of profitability. And then the last thing, the company acknowledged that the macro environment may continue to soften before it gets better into the year end here. So decent earnings from Apple. And if you look back and sort of take it in total, now that everything is sort of out of the way, we've had 5 double beats from all of the FANG names. So Meta, Apple, Microsoft, Google, all double beats across the board. So big tech definitely doing their fair share this earnings season. That's it here at Fit Forecast. I'll pass it back to Alejandro.
Awesome, Noah. Thank you, sir. Okay, guys, I'm going to share my screen. We're first going to talk about the system. Then I want to talk about the ES chart and a trade that I took last night. So first, looking at the system, what do we see? We, of course, got the sell signal on the 30-minute chart. As you guys can see, the bearish cross of the 10 SMA below the 50 SMA. The 50 SMA became resistance. And yesterday, the market found a low temporarily intraday. And at this point, we were 100 points extended from that 50 SMA. And as we know, whenever we're 80 to 100 points extended, that's considered to be either oversold territory or overbought territory based on whether we're trading above the 50 or below the 50. Okay, so that being said, taking a look at this, understanding that we were oversold, I was looking at the ES chart last night, and I'm going to quickly transition there as smoothly as possible. Give me 1 second. Okay. So in taking a look at the ES chart, what can we see? The April 26th low was taken out yesterday. This is a 4-hour chart. Pretty clear to see it on this chart, which is why I'm using this time frame. Okay, so we took out that low at 40.69. We dipped below it, reclaimed. Now we started to climb back up the levels and we started to reclaim previous support levels. So understanding that on the system we were oversold, seeing this potential bottoming pattern where we get the false breakdown and reclaim, I decided yesterday that I would take a long in the after hours at 40.86. And as you guys can see here, we're continuing to climb higher. So about 22 points in profit on this trade currently. And I talked about this week in the Discord. I said, when we see a pop or a bounce, some sort of relief rally from the bulls, we're likely to see this sort of setup where we put in a new low and then we reclaim and everybody gets super bearish and the bears get trapped. And so I was watching for this pattern this week. We got it yesterday. I'm very glad that I got long yesterday in the after hours. And as you guys can see here, we're really making a strong move in the pre-market. So again, just a simple trap, taking out the previous April 26th low. We reclaim that low, start to climb back up the levels. Once you reclaim a previous level of support that was resistance and you see that flip into support, it's typically a good spot to get long. So that's what the ES chart is telling us this morning. So good stuff there. Now over to Bet the Bell with Ramsay Rippers.
For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right. We got a big one today. SPY, nice little rip in the pre-market. Big recovery off NFP, made a new pre-market high. Apple earnings double beat yesterday. Let's bring the panel in. Let's bring the stats in. Diamond pulling away or in the win column, but tied for first. What do we got today, guys? Green or red, Alejandro?
I'm going green today. And I would like to vouch for Mander to be removed from the standings based on the fact that he's in front of me with about 20 less guesses.
No, I don't believe it. 20? Pull it back
It's
up.
got to be at least.
It's close. 14, it looks like. Or 13.
You can do math that quick? It's impressive.
Quick maths. 13. Diamond, what do we got?
I'll go green as well. Yeah, I'll go green as well. I like it.
Snipe?
Yeah, I'm gonna have to say green. Looks like we were trading higher in the pre-market and after hours yesterday.
You got some micro levels for us?
Yeah, I got some micro levels for you. I'm looking at 408.26, 409.20, 407.29, and last but certainly not least, 409.78. I think it's a pretty interesting day.
He's always prepared. And last but not least, Mo, let's hear it.
Green.
Green. I think everyone went green. Yeah, I like it. I think green as well. We literally got a sweep, double beats for the large cap tech. Not including Tesla. I don't even know if we were going to consider that large cap tech, but quite the ripper, man. Quite the ripper, and SPY has barely moved. Next question. Brian, let's pull up that Apple chart. So what I want to know, guys, Apple, we're about from 170. Well, let's see where we're trading at as of right now. In the pre-market, yeah, we're cracking 170. Made a high of 171.5 off of that. All of our earnings after hours yesterday. We were about 6.5–7% off of all-time highs, 182. What do you guys think? You think we break these all-time highs? We retest, make a new all-time high within the next 60 days, Alejandro?
Within the next 60 days.
60 days.
Yes. Yes, we do.
Yes. No.
I'll honestly agree with Alejandro because I think if I don't know, I feel like the
you know what's coming in the next
squeeze.
60 days. You know what's coming in the next 60 days.
What?
Potentially a pause. What do we think happened?
Nah, but I don't
Priced
know.
In?
I wouldn't say. Well, technically, yes, it is. I mean,
We also don't know what the reaction would be.
That's what I mean. The market's pricing in a 99% chance they pause at the next meeting. So, I mean, if they don't pause, it would be bigger news than if they did. At the same time, like you said, how does the market react to that, right? Like, dude, but for them to cut, like, think about that. Like, to go from where they were on Wednesday, where it's like we just raised 25, and he didn't say we're going to pause next time. He sort of alluded to it a little bit, and that's what people are like extrapolating out, but he didn't say explicitly we're going to pause. So like to go from that, leaving it on the table that they could raise next meeting to we need to cut rates. What has to happen? We just had 3 banks fail in like 12 hours, didn't blink. So like what would have to happen for him to want to do that? Whatever it is, it would have to be super bad. So like, I don't know how the market would be up here in that scenario. You know what I mean?
Fair.
I don't know, but directly to the Apple question, yes.
Mo.
Next 60 days. I don't think so. No. Yeah, don't think so. Who knows? But yeah, I don't think so.
Pull up that chart one more time and snipe. Snipe, what do you think?
Can I answer? Yeah, I thought you were gonna say something about the chart, but no, to be honest, I don't really think so. I mean, like, yes, you got a point there. If the Fed does pause, we could rip, but I don't know. I've seen a lot of resistance at that 174.5 level. On the hourly chart, when I'm looking pretty far back, we have some mean rejections up there. It is possible, but I'm gonna have to take no.
All right. Let's get into our last question of the day. Ryan, please pull up the Unusual Whales tweet. So AOC and Matt Gaetz, probably the two most furthest extremists as far as left-wing and right-wing politics, come together, create a bill, and present it to Congress to ban Congress members from owning and trading stocks. What do you guys think? You think that this is a? I mean, I saw the bill. It's pretty bipartisan. Really interesting that these two cats came together out of anyone to create this bill. What do you guys think? Are we for it? Are we against it?
Definitely for this. First off, Unusual Whales gets a crazy amount of impressions. 9 million on that tweet. That's but yeah, I think this is good, and I think everybody would agree with that solely from what we learned last year. Basically, these people have been outperforming even the best traders for a very long time now, and it's very clear that there's a lot of illegal activity that has been let slide, and so I really like this. Not that it impacts me personally in any way, shape, or form, but yeah, I think it's good.
Yeah, I would agree. I think it would make, like Alejandro said, like, I don't think it necessarily like would impact our day-to-days, obviously, but I think we would all feel better about, a government where people who make $100,000 a year don't have $200 million net worths. It just doesn't make sense. I think we'd all feel better about government if that was not the case. So yeah, I'll say I'm for it.
And Snipe.
Is the question, do I think it's going to pass, or is the question?
No. I mean, I don't think any of us think it's going to pass, but are you for it or are you against it?
Yeah, I'm definitely for it. I'm all for it. I'd love that, but that's not going to pass. That's just like I'm just wasting my time even reading it. To be honest, that's what I feel like.
Right. I'm definitely for it too. I think it's super interesting. I was reading something about Dianne Feinstein. She's been in politics since the late 70s, early 80s. She's a senator.
She's like 89, right?
Yeah, she's 89 years old. She's only been a senator since 1992, and since 92, her net worth has skyrocketed over 200 million. And I was reading some of the trades that she made. Absurd. Some of just the craziest. Unusual Whales included a tweet, and it's not just like her. It's not just Nancy Pelosi. It's tons of people, Democrat and Republican. You go into politics and your net worth is 10, 15, 20 times more than your compounded salary when you get out. So, I mean, I wish there was a way to, allow people, the members of Congress, to trade and follow the rules, follow the guidelines, just like everyone else, every other trader should. But it doesn't look like that's what's happening. It doesn't look like that's going to happen. And it doesn't look like this bill is going to pass either. But very interesting, AOC and Matt Gaetz. If you don't know either of them, go do some research. They're both probably the two most polarizing figures with respective to their parties. So interesting. Good to see some bipartisanship coming together, creating a bill. That's what it's all about, baby. God bless America. That's going to do it for Bet the Bell today. We'll pass it back to Hondo.
All right, Moe Mamba market analysis coming up next.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. Good morning. All right, SPY daily time frame here. So let's just go back a few days. Remember that 411.75 level I was telling you guys about? If we came down here I would like to see a test in the supply zone up here on the daily supply, and then a pullback into this 411.75, hold, and then potentially come up and fill this gap at 422. We never got that. We did get the move up into supply and then a drop into that level, but we closed below it. That led me to think further downside. That's what we got. We did hold the trend though. Next day we gapped down, but we came right into a daily demand. So this market hasn't been that easy to trade, especially swings. So we did come back into daily demand. Now, what do you expect? You expect further upside. We did hold the daily demand, closed within it. So you'll expect upside. Now, what I was thinking was that the market would come up into this trend line again, get a little break hook and go. But looks like we're going to open up. Actually, we will open up below it. So this will be interesting. Line up a daily trend line on here. Watch the close. We can still get through it today, right? But watch the close. Watch the close. Don't worry about the wick at the end of the day. See where we close. Do we come up, sell off outside the daily trend line? If we do that, we got to break hook and go to the downside. All right. So if we do close within, I have to watch this 411.75. We have to reclaim this level for further upside, in my opinion. So 408 here. Don't know if we'll see 411.75. Who knows? Market's been wild. But the big thing is to watch where we close today. See if we're able to hold this daily trend line. If we don't, if we do test it, close below it, I like further downside. If we do hold it, I'm 50-50. I really have to see us claim this 411.75, even if we close within. That is bullish though. This close within. If this key level wasn't there, that is bullish price action coming back within the trend line and closing. All right. That'll be it, Hondo. Thanks.
All right. Thanks a lot, Mo. That's going to do it, guys, for this week on Beat the Bell. Hopefully you guys were able to tune in. Reminder, we're live Monday, Wednesday, and Friday, 8:30 a.m. Eastern time. Love having you guys. If you're watching on the YouTube, do us a big favor, like and subscribe. That's going to do it. We'll be trading live all day in the Kane Capital Discord. You can scan that QR code right there, or you can go to kane-capital.com to trade with us. Have a great rest of your day, everybody. Have a phenomenal weekend, and we will see you back here on Monday morning at 8:30 a.m. Eastern time. Have a good one, everybody.